Hey guys, in a previous video I asked you, do you want me to go through the top suburbs, top locations in regional Australia where you can invest in 2025 and make money? So many of you commented yes, so that's what this episode's about. We'll go through the top, let's say 10 locations in regional Queensland, right down to the suburb level, right? And if you want, in other episodes, I can go through regional New South Wales, regional WA, regional SA, Victoria, etc. Let me know if you want that. Put that in the comments. Yes, type in regional if you want that, and I'll go through it. I'm not going to do any fluff. Let's get straight into it. My name is PK and I help people build passive income through the property investment accelerator using data without needing a $15,000 buyer's agent every single time. This channel, we expose reality on property investing, the economy, and financial happiness. I'm going to share my screen in a second and take you through the brass tacks, but let's start with the NAB Market Megatrends report. This recently came out, and what they are saying about regional Queensland is that it's had the strongest housing outcomes, and that continues to characterize regional Queensland's markets. Home values are up 11.4% over the 12 months to October 2024, and this was the second highest rate of annual growth across Australia's non-capital city markets after regional Western Australia, which was up 18.1%. I want to make something very clear. There are buyer's agents out there who have an agenda to sell you blue chip assets. They will constantly denigrate, talk down places like Townsville. They will constantly talk down regional Queensland. They'll constantly talk down sub 500k properties because they want to sell you $1 million, $2 million assets in Sydney because they will get bigger, fatter paychecks, commissions for doing so. It's a great business model, marketing tactic from them, but it's not the truth. And the truth is, in all these locations there, they say not to buy. My clients have already doubled their money, and I don't just mean doubling the deposits from 50,000 to 100,000 due to leverage. I mean that property has gone from 350 to 700,000 in a place like Townsville. My rant aside, rental markets have also remained tight with vacancy in October holding well below average levels at 1.6%. Regional Australia, regional Queensland is no different to capital city Australia, capital city Queensland, so long as the region that you're buying in is diversified, and not all of them are. Not all of them are like Toowoomba, which is so diversified across different employment sectors now. Every regional submarket of Queensland's recorded a rise in rents over the 12 months to October last year, and rents have risen the most across Mackay, Whitsundays, Townsville, Sunshine Coast, etc., which is actually more at 8% plus than even Brisbane. Now, I'm not saying that regional Queensland is better than Brisbane. Don't put words in my mouth, but you can make a lot of money in regional Queensland right now, especially at the sub 500, sub 600k price point, which is more difficult to do in Brisbane, let's be honest. And I know so many of you are looking under 500, 600k, so that's why this episode is really useful for you. So at a high level, dwellings in the last 12 months have risen more than 11% in regional Queensland. Houses and units have performed very, very similar. Very interesting, I think that is. And over the long term, of course, units underperform, but right now they seem to be catching up. That's not to say I would go off and buy a unit there. Of course, we want to not just buy for 1 year, but for 20, 30 years. And the other really interesting thing is that the 25th percentile value in dwellings, including houses, is 488. That means that it's still very affordable for us investors. You know, you can buy something for $1 million, but who wants to spend 700, 800, 900k million dollars in regional Queensland? You might as well do that in a capital city, but you don't have to. You can still buy properties under 500k, as the 25th percentile figure here reveals, both for units and houses. So let's get down to it. These are the top 10 suburbs with the highest change in house values over the last 12 months to October 2024, which basically is carrying on. There's no huge difference over the holiday period. So if you want short-term gains, like almost guaranteed, nothing is guaranteed in this world except for death and taxes, but almost guaranteed short-term gains in 2025, these are your 5 biggest bets, because it's really hard to stop a freight engine once it has full momentum and acceleration and force and momentum behind it. That's what these suburbs are doing because they're growing so fast. So fast, like let's see Rasmussen in Townsville, median value at 449. The 12-month growth has been 37.1%, and over the last 5 years on average, 13.6%. And what I love is that over the last 10 years, it's at 4.6%, which means that it hasn't overperformed the national average at 7%, 7.25%, according to the RBA over the last 30, 40 years in Australian real estate history. It hasn't outperformed, so it's not going to regress back down to the mean. It has opportunity to continue regressing up to the mean. Now, I want to say that it's not that these are the 10 suburbs that my clients are buying in. We want to be buying in locations like Rasmussen, but 2 years ago, 3 years ago as an ideal entry point. Sure, it might still be a great idea to buy in Rasmussen right now, but I want to also share, try to get the median value right now in Rasmussen of under 450,000, and it'll be really impossible because the data does lag a little bit and it's growing so much. So it's probably very hard, in fact impossible, to get something under 500k in Rasmussen. I think last year, 2024, was the best opportunity to get into Rasmussen. Then that's really where the last clients of mine were dipping their toes and getting their entry points in Rasmussen. Now that's not to say it's going to stop going up. We want to be timing the ideal buying window, but it will continue rising. So for those of you, for whatever reason, don't want to be perfectionists, or not even perfectionists, you're okay to invest, at 10 o'clock, at 11 o'clock, maybe past 9 o'clock, then these suburbs are really ideal for you. And I don't want to say that these are the best 10 that my clients are buying in, but you can certainly make money there right now. Rasmussen is obviously in Townsville on the southwest side. It's a little bit far out from the central CBD, but it's still a residential location and it's rising very quickly. Townsville's actually remarkably diversified, especially with healthcare and public sector as their number 1 and 2 driving forces in terms of employment. It was a major hub for fly in, fly out workers during the mining boom, but since then its economy was heavily impacted by the end of the mining boom around 2014-ish. And unemployment rose to beyond 10% in 2016. That's where it gets all the stigma from with crime, etc. But unemployment's really come down in the last, I would say, 6 years, even started before COVID with the new city plan. And now it's actually under 3%. The economy is robust. It's experienced huge internal migration. It's got one of the highest per capita infrastructure spends in all of Australia. And this has been rising since 2015, 2016. It's got about 200,000 people, so it's not small, it's not like 10,000, 20,000 people. Yes, you have to dilute your yield by, let's say, 0.5 to 1% because it's got higher insurance premiums, but then the yields are higher to start with. Got the biggest Australian army base, biggest copper refinery, biggest zinc refinery. It's got higher incomes compared to a place like Bundaberg, despite house prices being so affordable still. In the last 5 years, employment has gone up 20% in Townsville. That's 4 times the rate that employment has risen in Sydney, and 18% of all jobs are in healthcare. Mining is just 3%. You can see how it's shifted, right? The local economy has been really driven by strategic city council planning. And when you have so many jobs in healthcare, high earning, stable, long-term stability is what that provides to the workforce. It's got huge infrastructure projects, over $5 billion, like the North Rail Yards, which is $1 billion, the University Hospital expansion, $530 million, Seaport expansion, $1.6 billion, defense investment, $1 billion. Of course, it's had huge growth. Clients of mine started investing in there, I think, around 2021. We're still investing there. Many of them have doubled their property prices. We're still investing there, but now no longer under 500,000. But I want to share with you these 10 suburbs where you can buy under or around 500,000 right now as a freely for the public, because I do like to share information freely. So so you can make so much money, but at the same time not cannibalize it with my clients who always get the first suburbs, first dibs, the best deals because of more ideal market entry timing using data. I genuinely think Townsville is going to go up another 20%-ish, maybe more, maybe a little bit less, depending on how interest rates go in 2025. The median is still affordable given local incomes at about 520,000. And you can see on this report, it's Rasmussen, it's Woolgooroo, it's Vincent, it's Tuloa, it's Cranbrook, it's Kurrajong, it's Diragun, and Condon. These 8 suburbs which have the most momentum behind them, where if you buy there right now, yes, you'll make money. Yeah, no guarantees, of course. I can't say that publicly, but yeah, it's a brave man that would bet against them. But of course, we want to make money in the long term, not just the short term. This episode is about 2025 growth outcomes. Especially in a place like Vincent. You know, Vincent was so cheap. It was like, it's a small place over here, pretty close to the center of Townsville. You could get something in the 200s, even as recently as 2023, late 2023, 10th percentile type property price. And that has gone up. This is not theory. This is based on multiple clients' valuations. It's gone up 50%, 60%. So you're buying something for 250. Now that's up, 100,000. It's up 130,000. That's the kind of outcomes you could have expected in Vincent. Of course, there's other opportunities like this right now in regional Victoria, regional New South Wales, where are really tempting. But even if you invest now, your money is unlikely to go backwards. Cranbrook was one of the first suburbs we were investing in Townsville way back when. And so many properties in Cranbrook are not in flood zones. They don't have the higher insurance premiums. And so you were getting that 7% yield back in the day, whilst only paying $1,500, maybe max $2,200 a year for your insurance premium, which was really the sweet spot. But if we come back down to this list from NAB, you'll see Rockhampton City as number 2. It's risen 36.2%, and the median value in Rockhampton is $323,000 for this suburb. Still very affordable. It's gone up 15% on average over the last 5 years. And yes, it's grown more than Rasmussen over 10 years, but still under the median of long-term property averages, which is a good thing. People will say, we want past growth because that means future growth will occur. It's actually quite the opposite. We want inferior past growth because that means all property markets tend to oscillate and catch up to each other in their overall rate of growth. So there's so much more upside opportunity. It's just about waiting for that spark, something to jolt a market in life. And that's when you see that 37% growth in 1 year. It's proof right here. Rockhampton City has been so good for us. Once again, started investing in a big way in 2022, just when interest rates started going to the moon. We were buying high yield properties, places like Frenchville. Quoted in realestate.com.au in an article saying that Frenchville was one of my favorite suburbs. You can see how well it's performed, starting off with a yield of above 6%. Some great owner-occupier pockets as well, like really, relatively speaking for Rockhampton, wealthy, affluent people live in some of these really nice pockets of Frenchville that have almost gone up 60, 70, 80% now since then. But I really like Rockhampton. It's $1 billion of military training development projects for Singapore government over 25 years. That's the contract Rocky has. $1 billion being spent on road infrastructure in that region, $2.5 billion in Shoalwater Bay Military Training Center development. It's had more than 20% growth in the last 12 months. Of course, this suburb has had the most growth. It's a completely different economy from 10 years ago where it was quite cyclical, and the population growth and interstate migration has been growing consistently since 2016. This is not a COVID phenomenon. It is not rising just because of COVID. It was a pre-COVID momentum thing. And then number 9 on this list, you have Barney Point in Gladstone, where you can buy something for under $400K. It's grown 32% in the last 12 months, 13.2% on average last 5 years. And this is the most tempting thing, only 3.3% on average over the last 10 years. Think about the upside opportunity. All markets over a 35-year period, looking at the statistics, grow within 1 to 2 standard deviations of each other. What that tells me is that over the long term, 30, 40 years, everything basically does very similar. So from market timing perspective, this is so juicy. There it is in Gladstone, which if you zoom out a little bit, is further down from Rocky. Of course, Townsville was further up. We're going down the coast to Gladstone right now, which is a coastline town. But I have to say, Gladstone is not super diversified. It's not as diversified as the ones that I've just mentioned. It's a relatively smaller regional town with a population under 50,000. The employment sectors really haven't changed all that materially from between 2011 to 16 or 16 to 21. Technicians and trade workers, professionals, laborers, machine operators, and drivers are the most popular occupations there. The Gladstone Council is continuing to focus on diversifying to prosper over the long term. But for now, still, it's really heavily reliant on manufacturing, construction, and all things industrial-led. People are employed in industries like aluminium production, aluminium smelting, engineering design, and engineering consulting upstream for gas projects. They largely support the resource industry, although they're not directly like miners. Gladstone was impacted in a big way. For those of you who've been investors or from regional Queensland, you'd be like, why is he talking up Gladstone? I'm not. It was impacted by a big way by the mining downturn towards the start of the last decade. And I personally feel it's still susceptible, although the momentum that it has suggests that in the short term, 1 or 2 years, it will give a lot of equity for a lot of people. Hopefully in that 2 years, it diversifies more, and for the medium long term, prospects improve. But right now, we can't be as sure about them compared to a place like Townsville, that's for sure. Those were the best performing suburbs in regional Queensland from a growth perspective last year, but check it out from a yield perspective. You've got places like Dysart and Isaac, where the gross rental yield is 10.2%. That's positive cash flow right there. Blackwater, 10%, Moranbah, 9.7%, Rockhampton City, I just mentioned that before, right? 7.2%. So that seems to be a really good sweet spot. Not that I'm saying to go off and buy there. Certainly, my clients are no longer buying in some of these locations because we already did our lion's share of buying and now reaping the result. As you sow, you shall reap. We sowed early. Market timing, buying entry window. Emerald, 6.9%. Roma, 6.8%. But a lot of these are heavily mining industry related. So, if you want to go off and blindfold buy in a place like Blackwater just because the property pays for itself, you have to be thinking about, okay, am I really educated in property? What if this gives great cash flow, but no capital growth or inferior capital growth? How am I going to build my portfolio? How am I going to extract equity? How am I going to get my LVR down? Property investing is all about a balance between yield and capital growth. You shouldn't have to trade off one for the other. You should be targeting both in every property. So some of these locations, especially like Blackwater, I would really steer you away from. Some others like South Mackay, and Rockhampton City may be better. Everyone's strategy is different horses for different courses. I've not done an episode like this for a while. I thought I'd do it for full transparency. For those of you who are watching who are my clients, congratulations those who have already bought there in the years gone by. I'm not trying to pump and dump these areas either. Basically, none of my clients will be selling there. They don't want to be cutting the head off their golden goose, which will give them the passive income as these areas continue to rise, rents continue to rise, and they give them passive income. This episode is not about pumping and dumping. It's not about pumping any particular locations, but these are the best growing locations and the highest yielding locations right now in regional Queensland that you should do your further due diligence on. Are there better locations to invest right now in regional Queensland and regional Australia versus these? The answer is yes. Do you want to know what they are? Then subscribe, hit the like button, and let me do more episodes like this. Join the Facebook group, Australian Property Mastery with PK. I'll leave the links below, because remember, the most important real estate is not regional Queensland, it's the 6 inches between your 2 ears. Catch you later, guys.